Welcome to Volatility 411 for Equity Armor Investments. I am Joe Teague, and we have a Fed day today in the market. We'll be watching what Powell has to say about their QE forever and about their stimulus, about their money printing, about everything they got going on. How long are these rates going to stay low? We'll be watching all that as we see now. Since March 23 low, the NASDAQ has been the best performing index, and they've been loving these low rates. They're loving the bond liquidity. All that money being pushed into the bond markets, allowing these companies to, number one, refinance, number two, take out new loans and put it to work. And the company is expecting them to create a fantastic multiple off of that because of the bond liquidity. Now, interesting to note, last Friday we got better economic news. What sector performed well then? The S&P 500 and the Dow Jones outperformed the NASDAQ because, of course, the economy is recovering faster, and that's what they're focusing in on. It's a more broad index, and they have less sensitivity to the bond liquidity than the NASDAQ does. Today, what's happening is reverse. Bond rates are lower ahead of the meeting, and of course, yields are lower, bonds are higher, and the NASDAQ is way outperforming again. So fascinating to see. I think the market is expecting the Fed to stay accommodative, but we'll have to wait and see. And of course, yes, these PEs and the NASDAQ are approaching .com levels, but the yield these companies have to pay are nowhere near what they were paying in .com, and they're hopefully, for investors' sake, are going to be able to perform. Now, all this is depending on the economy recovering, and that's why, number one, I think low yields should lead to higher prices, equity prices. Number two, low yields should lead to higher volatility. We'll be watching how that all plays out. Now, in the meantime, when we get the NASDAQ up, the S&P 500 down, that's actually a lower volatility event. There's actually low correlations, and I think low volatility or volatility sellers like to see that. When we start to see everything falling at the same time, that's higher correlations. That's correlated, of course, with a higher VIX. So that'll be interesting to watch how this all plays out. We start seeing the indices move together. That's when we not need to worry to the upside. For Equity Armor Investments, I'm Joe Teague.